Revenue is up by 18%. You've seen strong performance coming through across all three territories. Take us over the period that was. Headline earnings per share also looking stronger from a normalised perspective. We saw it headline earnings rising by around 12%. So things looking pretty good for Mediclinic at this stage.
Yes, good afternoon. We saw a significant rise in our revenue, but we need to take into consideration that more than 50% of our revenue is now derived offshore. And if we look at specifically at Switzerland, where the Swiss franc appreciated quite strongly against the rand, that also contributed to the strong performance.
Absolutely. So, given the fact that we're starting to see a big contribution outside of South Africa, are you expecting this revenue mix to stay the same, or would you say that global operations are going to contribute far more to revenue going forward?
Difficult to predict. Obviously, the exchange rate will always play a significant role, and we can see it go up and go down. But in terms of the maturity of the businesses, our Swiss and South African operations are quite mature. We still do make further investments. But this Dubai platform being the smallest, obviously growing from a low base, still have the most potential for growth from the existing base.
You've also spent quite a bit of money on capex, 797 million rand or so. What kind of numbers can we expect going forward? Are you going to continue to increase capex spend?
We believe that we must invest in our businesses, and we've said before, future growth in Switzerland is actually based on an aging population and new technology. In South Africa, whenever we get the opportunity to build more capacity to existing hospitals, like we've done now at our Nelspruit Hospital and our Limpopo Hospital, we will do so. But in the year going forward, we also reported quite comprehensively that we plan to build a new hospital in Centurion up in the north.
Absolutely. You've actually spent quite a bit of money in Switzerland and also just a bit coming through in the Emirates as well, which is quite interesting. You're spending across the board. Again, is this just really indicative of the areas that you're going to be predominantly focused on?
Yes, we will keep our focus on all three platforms, and as we said, we would like to leverage on our structures in the existing platform, so whenever there's an opportunity to grow from the existing base, we will do so as the first preference.
There's also a bit of concern, and I've mentioned this to you before, Danie, when you see the regulatory environment in Switzerland, if we do see any changes there, this might not work to your favor. What is the update on this?
It's challenging. We had a complete new dispensation as from the 1st of January this year. To summarize, it's very complicated, but it's all about planning. So which hospitals will be used to service the general insured patients, which is compulsory in Switzerland. And then secondly, who will finance it? And there will be a co-finance coming from the cantons or the government. And then thirdly, a new price regulation on fixed prices, or the so-called DRGs, the diagnostic related groups. So complicated, but the management there under tremendous pressure. It also brought a little bit of cost into the system in terms of infrastructure like staff.
Yeah.
But we are confident the management actually did quite well under the circumstances.
Fantastic, Danie. We have to leave it there, so thank you so much for joining us.